Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Apple report for Wednesday, September 20th, 2023. Before I click through the charts, as usual, I'd just like to encourage you to please click like if you haven't already, share the content with friends and colleagues, become a Wicked Stocks YouTube channel subscriber, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Apple report, daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, weekly analysis in the S&P 500 index, the NASDAQ 100 index, the long bond ETF, the TLT, as well as 2 individual stock picks every week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% moves on those underlying stock picks. And in fact, on Tuesday, we put out a stock pick on FedEx Corporation, where we're testing a pivotal area right now that has ramifications through the rest of the year. So there is an opportunity there. You can check it out for free. If you sign up for wickedstocks.com, we offer a 5-day free trial. And so you could check out FedEx and everything I just mentioned on a daily basis for 5 days in a row. If you don't like what you see, you can cancel your subscription at no cost to you whatsoever. So on with the charts for Apple Wednesday. Work my way, start with the big picture, work our way into the day itself. This is just yet another reminder that we are still in a long-term show of strength, having settled last May above the 167.99 channel top. We may see this structure over the next few weeks. That's certainly in the cards right now, holding below this 180.36 daily channel top. So keep that in mind. This is a sellable area that does allow the market to fall back to the 167.99 channel top over the next 2 to 3 weeks. But because this is still, in my opinion, a bull market, or one that takes time to play out, this is just a normal cyclical rotation in what should be an eventual 227.19 longer term target that I think is in reach by the end of next year or sooner. And I can get to that in a moment. But so that updraft still exists. And the only reason I'm emphasizing that is just sort of to be careful, selling 180.36, have at it. Whatever that means to you, shorting the stock, does that mean buying 168 or 165 out of the money puts that don't expire for at least a month because of that longer term support area that I mentioned here? When I say be careful, it's because of the longer-term bullish nature that this market still has. And I'll say that if we push or open today above 180.36, we might actually reach 183.70 intraday. If we close today above 180.36, I'm anticipating the 191 even channel top over the next 2 to 3 weeks. So if we do close above 180.36 and you're long those 168 call or puts, for instance, I would cover those and then in turn reach for 190 or 192 out of the money calls that don't expire for at least a month. You may go a couple of months out on that for better delta response on that option price. But this 191 even becomes a 2 to 3 week target. If we close today above 180.36, 191 even can contain buying perhaps through October. We could fall off from here in a meaningful way. And yet, if we close above 191 even in the coming month or two, it is consistent with that long-term buy signal above 167.99. And I would then expect within 2 to 3 months 210.69. So this whole picture can look very different in the coming weeks. The first step is above 180.36. The second step is above 191 even. And then I think we're off to the races. New all-time highs, 210.69 expected over the following 2 to 3 months. But we're nowhere near that just yet. We are in the process of approaching 180.36, and we can top out there for the week and even perhaps through next week, and below which we can fall into this 165.77 to 167.99 region over the next, couple of weeks. This is a daily chart. I think the next week or two is certainly still possible. Let's take a look at the downside today. Familiar picture, 176.10, the high of the low from about 4 trading days ago, can contain intraday support, can contain intraday selling. If we break 176.10, we could perhaps test 171.96 intraday. That is the move low from August. We could double bottom there for the day and possibly through the rest of the week. But closing below 171.96, while I certainly don't expect that today, if over the next 3 to 5 days we do, then we're just a few days away from actually testing this wide zone of long-term support that is probably better shown here for proper context. 169.94, a 3/8 downside Fibonacci, 167.99, that long-term channel top in the weekly chart, and 165.77, a 2 to 3 month channel bottom. This whole area well suited to absorb selling through the rest of the year. If we dip into this zone, you may reach for, sort of pick your strike price. You may reach for 200s just based on the 198.23 July high. I'm talking 200 out of the money calls that don't expire. I would go 6 months out on that, even though I don't think it would take more than several months to rally back to this zone. But all of that is a moot point if we close today above 180.36. I no longer than anticipating the upper 160s as a near-term target. I think I've said it all. I'm going to leave it at that for Wednesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.